What if I told you that America's biggest strength isn't its military, its technology, or even its economy, but a piece of paper that promises to pay you back someday? And what if that promise ever broke? Within 2 days, every ATM could go dark, your savings could become worthless, and the global economy would enter a death spiral unlike anything humanity has ever seen. I'm the monetary archaeologist, and today we're digging into the most dangerous financial weapon ever created, American debt. But before we go further, hit that subscribe button right now. Because what you're about to discover will change how you see every dollar you've ever held. Here's something they don't teach you in school. The United States doesn't just owe money, it owes more money than any nation in human history. Over $38 trillion and counting. That's trillion with a T, a number so massive it's almost meaningless to the human brain. But here's the twist. This isn't a problem. It's actually the secret to American power. Yeah, you heard that right. The debt isn't a bug in the system, it's a feature. The entire modern world runs on America's ability to borrow unlimited amounts of money and convince everyone it'll pay them back, eventually. This isn't just about economics. This is about belief, about faith, about a magic trick so brilliant that even when you explain how it works, people still fall for it. And today, we're going back in time to uncover how the richest nation on Earth became the most indebted one, and why that debt might be the only thing keeping civilization from falling apart. Let's dig in. Our story begins in 1790. Picture this. America had just won its independence from Britain, but the victory came at a brutal cost. The new nation was drowning in debt, money owed to soldiers who fought the war, citizens who funded it, and foreign allies like France who backed the revolution. The logical move: walk away, declare bankruptcy, start fresh. After all, who was going to force a brand new country to pay up? But then came Alexander Hamilton. Hamilton wasn't your typical politician. He was a financial genius who understood something revolutionary. Debt could be a tool, not a burden. While others saw red ink, he saw opportunity. Hamilton stood before Congress and made an outrageous proposal. America should not only pay back its debts, it should embrace borrowing as a permanent strategy. He argued that if the young nation could prove it honored its promises, it would become trustworthy. And trust, in the world of money, is everything. So America started issuing bonds. These were basically IOUs, promises to pay investors back with interest. And something shocking happened. People bought them. Wealthy Europeans, skeptical at first, began treating American bonds like gold. The United States had weaponized its reputation. This was the birth of something bigger than money. It was the birth of financial credibility. Hamilton's gamble worked so well that borrowing became America's superpower. Want to build railroads across an entire continent? Borrow. Need to industrialize faster than Europe? Borrow. Fighting a world war? Borrow trillions. Every major leap in American history was financed not with savings, but with debt. And the world kept lending because America kept paying. Always on time, always reliable, always safe. By the time World War II ended, the United States wasn't just powerful. It was the lender, the borrower, and the bank all at once. Now fast forward to 1944. World War II is still raging, but the Allies can already see victory on the horizon. So leaders from 44 nations gather in a small mountain town in New Hampshire called Bretton Woods. Their mission? Redesign the entire global economy. Europe was in ruins. Asia was shattered. The old empires, Britain, France, Germany, were broke and broken. But America was untouched. It held 2/3 of the world's gold reserves and produced half of everything made on the planet. So the world made a deal. From now on, the US dollar would be the global currency. Every other currency would be tied to the dollar, and the dollar would be tied to gold. $35 per ounce, fixed and guaranteed. This was the gold standard, but with an American twist. What it meant in practice was simple. If you wanted to trade internationally, you needed dollars. If you wanted to save safely, you bought U.S. Treasury bonds. The American government's debt became the foundation of the entire world economy. Think about that. A country's IOUs became more valuable than gold itself. For 25 years, this system worked beautifully. The dollar was stable, trade flourished, the world rebuilt itself using American credit as the scaffolding. But nothing lasts forever. By the late 1960s, the U.S. was spending money it didn't have. The Vietnam War was bleeding billions. Domestic programs were expanding, and foreign governments started to notice something troubling. There were way more dollars circulating in the world than America had gold to back them up. France, always skeptical of American power, started demanding gold instead of paper. Other nations followed. America's gold vaults began to empty. And that's when President Richard Nixon made a decision that would change money forever. August 15, 1971. Nixon appeared on national television and announced something that seemed technical but was actually earth-shattering. The United States would no longer exchange dollars for gold. Just like that, the link was severed. Money was no longer tied to anything physical, no metal, no commodity, nothing you could touch or weigh. From that moment forward, the dollar's value rested entirely on one thing: trust in the U.S. government. Economists call this fiat currency, money backed by nothing but faith. And incredibly, it worked. The world didn't panic. Markets adjusted. The dollar remained the global reserve currency, but now it floated free, unshackled from the limits of gold mines and vaults. This was the birth of the debt standard. Gold used to back the dollar. Now U.S. Treasury bonds did. Here's why that's insane. Bonds are just promises. They're contracts that say, we'll pay you back later. And the entire global financial system, every bank, every pension fund, every government reserve, runs on these promises. America discovered it could create infinite credit as long as everyone kept believing. And they did. Treasury bonds became the safest investment on earth. Not because they were risk-free, but because everyone agreed to pretend they were. Banks used them as collateral for massive loans. Countries stockpiled them like treasure. Trillions of dollars in bonds circulated the globe, holding up the entire architecture of modern finance. The system had one simple rule. When old bonds matured, the U.S. issued new ones. It never actually paid off the debt. It just rolled it over, again and again, forever. And as long as that cycle continued, everything worked. But the system had a fatal flaw. It required absolute faith. The moment that faith cracked, the entire house of cards could collapse in hours. Let's be clear about what we're really talking about when we say national debt. You're not talking about a credit card bill. You're talking about the operating system of global capitalism. Every interest rate, every loan, every financial transaction on Earth is built on top of U.S. government debt. When a bank gives you a mortgage, it's calculating risk based on treasury rates. When a country trades oil, it's pricing it in dollars backed by treasury bonds. When a pension fund promises your retirement, it's invested in the safety of U.S. debt. So when politicians talk about the debt like it's some future problem we need to fix, they're missing the point. The debt isn't a problem to solve, it's the system itself. The U.S. doesn't want to pay off its debt. It can't. If it did, the entire global economy would collapse because there would be no safe asset left to anchor everything else. That's the paradox. American power depends on American debt. The world doesn't just tolerate it, they demand it. But that doesn't mean the system is safe. In 1979, a tiny technical glitch delayed some treasury payments by just a few days. Nothing major, right? Wrong. Interest rates spiked immediately. Investors panicked. The effects rippled through markets for years. In 2011, Congress played chicken with the debt ceiling, the legal limit on how much the government can borrow. They came within hours of default. The result? America's credit rating was downgraded for the first time in history. Stock markets lost trillions. Retirement accounts evaporated. And that was just from the threat of default, not an actual missed payment, just the possibility. Why? Because the entire system runs on confidence. And confidence is fragile. Every Treasury bond carries an invisible label, risk-free. That label allows banks to lend trillions, governments to build budgets, and retirees to sleep at night. But if the U.S. ever actually defaulted, if it missed even one payment, that label disappears. And when the risk-free asset becomes risky, there's nowhere left to hide. Right now, in 2025, the cracks are starting to show. The national debt just passed $38 trillion. To put that in perspective, that's more than the entire U.S. economy produces in a year. And it's growing faster than ever. But here's the really scary part: the interest payments. America now pays nearly $1 trillion per year just in interest on its debt. Not paying down the principal, not investing in infrastructure, just interest. That's almost as much as the entire defense budget. Think about that. The government is borrowing money to pay interest on money it already borrowed.
It's like using one credit card to pay off another, a strategy that works until it doesn't. Meanwhile, the political system treats the debt ceiling like a hostage situation. Every few years, Congress threatens to refuse raising the borrowing limit, bringing the country to the edge of default. Markets panic, investors sweat, and at the last second, they blink and raise it again. But each time they play this game, the world watches, and the world is starting to lose patience. China, once the biggest foreign holder of U.S. debt, has been quietly selling off Treasury bonds. Japan is trimming its holdings. Saudi Arabia, which used to automatically recycle its oil profits into U.S. bonds, is now exploring other options. Central banks around the world are buying gold again, physical gold, for the first time in decades. Countries like Brazil, India, and Russia are experimenting with trading systems that bypass the dollar entirely. For the first time in 50 years, the world's faith in American debt is wobbling. Not because the U.S. can't pay, it absolutely can. The Federal Reserve could print enough money to cover the debt tomorrow if it wanted to. No, the real risk is political. It's the risk that America chooses not to pay, or that dysfunction prevents it from paying on time. And in a system built entirely on trust, politics becomes the ultimate threat. So what actually happens if the United States defaults? It wouldn't start with explosions or sirens. It would start with silence. Imagine, the Treasury misses a payment. Maybe it's a political standoff. Maybe it's a technical error. Doesn't matter. The moment it happens, every trading algorithm on Wall Street detects it instantly. Within minutes, Treasury bond prices start falling, not crashing, just slipping. But that slip sends a shockwave through every financial institution on Earth. Because Treasury bonds aren't just investments, they're collateral. Banks use them to secure loans worth trillions. Hedge funds use them to leverage massive bets. If those bonds lose value, all that collateral becomes worthless. Margin calls go out, loans get recalled, credit freezes. Within hours, banks stop trusting each other. The overnight lending market, the invisible system that keeps banks liquid, seizes up. ATMs start running out of cash. Credit cards get declined. Mortgages can't close. By the end of day one, global stock markets are in free fall. Not because companies are failing, but because the foundation of value itself is collapsing. Day two, foreign central banks panic. China, Japan, Europe, they all hold trillions in Treasury bonds. If those bonds aren't safe, their entire reserve systems are at risk. They start dumping dollars, trying to get out before the crash. The dollar plummets. Inflation explodes. Oil-producing nations stop accepting dollars for payment. Import costs skyrocket. Day three, the U.S. government can't pay its bills. Social Security checks don't go out. Veterans' benefits freeze. Federal workers aren't paid. The military runs on fumes. By the end of the first week, the global economy is in cardiac arrest. And here's the nightmare. There's no fix. The Federal Reserve can't print trust. The government can't borrow its way out of a crisis caused by borrowing. The very tools that built the system can't repair it once faith is gone. This isn't speculation. This is what every financial war game predicts. A U.S. default wouldn't be a recession. It would be a reset, a collapse of the entire debt-based global order. History has seen this story before. Rome had the denarius. For centuries, it was the currency of the civilized world. But as the empire weakened, they started debasing it, mixing cheap metals with silver to stretch their resources. At first, people didn't notice. Then they stopped trusting it. Then they stopped using it. The British pound ruled the 19th century, the same way the dollar rules today. London was the financial capital of the world. British debt financed global trade. But 2 world wars drained Britain's wealth. The pound collapsed. The empire faded. Now it's America's turn to face the same test. Every empire discovers the same truth. Currency lasts only as long as the empire behind it. And empires don't fall because they run out of money. They fall because people stop believing in them. The United States isn't there yet, but the warning signs are flashing. Each debt ceiling crisis chips away at credibility. Each trillion added to the debt raises questions about sustainability. Each political circus in Washington makes the world a little more nervous. And slowly, quietly, the world is preparing for a future where the dollar isn't dominant. They're not attacking it. They're not trying to replace it overnight. They're just hedging, diversifying, building alternatives. That's how empires end in the modern age, not with wars, but with caution. The world won't destroy the dollar.
It'll just stop needing it as much. And when that happens, America's debt stops being a superpower and starts being a burden. Here's the ultimate irony. The United States built an empire on a promise to pay back money it never actually repays. For 80 years, this magic trick has worked flawlessly. The world lends to America. America issues bonds. Those bonds become the world's savings. And the cycle repeats forever. It's the greatest financial innovation in history, a system where debt creates stability instead of destroying it. But that system has a ticking clock, because debt built on faith only works as long as the faith remains absolute. The moment it becomes conditional, the whole structure wobbles. Every political standoff, every missed opportunity to reform spending, every trillion added without a plan, these don't just increase the debt, they decrease the trust. And trust, once lost, can't be borrowed back. The United States doesn't need to default for the system to break. It just needs to make the world doubt it won't. Because in a system where perception is everything, fear is just as destructive as reality. So here's where we are. The United States owes more money than any nation in history. That debt is growing faster than ever. Interest payments are approaching $1 trillion a year. Political dysfunction turns borrowing into a crisis every few years. And the world is slowly, carefully preparing for the possibility that American promises might not be eternal. But the system still stands, for now. Investors still buy Treasury bonds. The dollar still dominates global trade. Markets still believe that when it comes down to it, America will pay. The question isn't whether the U.S. can pay its debt. It's whether it will choose to, and whether the world will keep believing long enough for it to matter. Because the truth buried beneath all the numbers, all the politics, all the economics is brutally simple. The world doesn't run on dollars. It runs on trust. And trust is the one currency no government can print, no treasury can issue, and no empire can survive without. The United States discovered how to turn debt into power. But history teaches us that every empire that masters money eventually discovers the same lesson. Power built on promises is only as strong as the promise itself. And when that promise cracks, empires don't collapse. They just fade into the pages we archaeologists dig through, looking for answers.
If this changed how you see money and power, do me a favor. Smash that subscribe button and hit the notification bell. Because here at Monetary Archaeologist, we dig deeper than headlines. We uncover the truth buried in history's vaults. More shocking financial secrets coming soon. Stay curious, stay skeptical, and remember, every dollar you hold is just a promise. Make sure you know who's making it.